Good morning. Today is Thursday, June 4th, 2026. I'm Joe Terril, president of Terril and Company Private Wealth Managers in St. Louis, Missouri, with right at $1 billion worth of discretionary assets under management. This is another update of our thoughts on the markets and economy, and certainly with what's going on right now, there's a lot of thoughts and a lot to talk about. So in advance, pardon me for maybe trying to get through with everyone as much as we can, as quick as we can, to cover as much material as possible. We have a new face first sitting at the table here today. This is Thomas Dolan. He is a graduate student in business at the University of Missouri. He's doing a summer internship with us. And we know it's very important to know not only what the consumer is thinking, what's going on with the economy, but we very much appreciate having the views of young, soon-to-be professional people. So Thomas, we'll get to you in a moment, but first, as always, I want to start with Kristen Wood. Kristen, we've designated you our consumer economy person. Since our last couple of videos, do you see anything at all different going on with the family market out there? Anybody cutting back? Just give us an idea of what's happening.
I think there's still strong growth. I think it's, same as the last video, but yesterday we saw the economic statistics come out about consumers, and it showed 22 straight months increased spending around services, which just goes to show you people are still spending. And, I think people are being more conscious about where they're spending their money. That's not going to say that people are just going out and being reckless as usual. They're really targeting, this is where I want to put my money. As we can see, there hasn't been a drop off in auto sales. Maybe people are putting more of their money towards, I want to get the nicer car. Maybe I'll cut back a little on the frivolous spending, but, business as usual.
This is the Terril and Company view, as we've said for 3 years now. The economy is strong, and it appears it's continuing to stay strong. We don't see anything that is going to lead us to a pending recession. But I'm going to jump to you, Thomas, for a moment. What is your generation of friends that are getting ready soon to enter the real world with a master's degree in business? Are they worried about finding jobs because of AI?
Yes, 100%. I'd say there is a real concern amongst my generation with the automation of entry-level jobs in the workforce across all industries. A common theme now is going to getting your master's degree after undergrad. This is seen now as delaying unemployment across my generation, and it's definitely a real trend, and AI is not slowing down for anybody.
Is that leading your generation or those people to stop spending money? Are they hunkering down, or with the 4th of July coming, is everyone still making plans to travel, see friends, spend money, party, if you will, or what are they doing?
Yeah, of course. So amongst my generation, especially in college, a lot of the on-campus jobs my friends work, whether that's working at a restaurant, working at the student center, or being paid to be a teaching assistant in their lectures, these jobs aren't immediately automated by AI the way that some bigger corporations in tech and finance are. So they're not as vulnerable today, and they'll be able to kind of continue with those jobs and continue spending because they have those jobs on campus.
Thomas, thank you. Dave, I'm going to switch to you. I really want to save as much time as possible for talk about stocks, but fixed income and bonds are beginning to affect stocks. Why don't you explain for our viewers what I mean by that statement?
Yeah, but thank you, Joe. Well, yeah, our viewpoint on rates, rates are here or higher for longer. That's, that's still the case. And the demand for capital, I think, is starting to have an effect on the markets. Earlier this week, IBM CEO said the AI industry needs 6 to 8 trillion in capex. That's a heck of a lot of money. As a result of that, this week, Google, who previously has issued $50 billion in debt to fund their AI data centers, issued $90 billion of new equity, backstopped by Berkshire Hathaway. That's eye-opening to me in the fact that here's a company that has a lot of cash on the balance sheet, generates a lot of free cash flow, and they're, instead of issuing debt, issuing equity. And I
Dave, how much of that was the bond market saying to Google and Meta and some of these companies that have already tapped the bond market for billions? How much of that was the bond market telling Google, no mas, go sell stock to raise your money?
I think a big part of it was in the fact that fixed income investors, have their allocation to data centers filled. You look at a diversified portfolio of bonds. One of their strategies is if the sector is too big, they're going to go somewhere. They're going to diversify to other sectors. And right now, the data center sector is becoming too big, and you're starting to see crowding out, and therefore that should raise rates and make it more difficult for these companies to fund their capital spending.
Dave, thank you, and it's going to segue me into Bill and Russ here. We talked about Terril and Company's thoughts that the economy's staying strong. We just mentioned that we believe interest rates are going to stay at these levels and probably even drift higher. But let's talk about what's been going on in the past couple of weeks with the stock market, because this has to be telling us, with the action that we're seeing in pricing and what's going to happen, that this can't be a great time to be buying some of these stocks. And if anything, it means we should be even more careful with what we're doing with clients' funds. But Bill, I'm going to start with you. Russ, you interrupt if you want, but I may be interrupting because I'm very opinionated about. I've seen this in my 45 years. I've seen this before, and it scares me.
Sure.
Bill, I'm going to turn it over to you.
Thanks, Joe. I think what Joe has said is correct. What we're seeing and observing is really kind of unprecedented behavior. So you're seeing really volatile moves in stocks, both up and down. So a few companies that report earnings pretty well: Micron, Dell, Hewlett-Packard. Those stocks are up 25-30% in a day. Conversely, other names that don't have as good of earnings, they're down 30% in a day. And I think when you see these types of volatile moves, it's very characteristic of an extended market, right? So valuations are high. Just recently, we've had 9 weeks in a row of up markets. So the last few days have been a little bit more choppy. So, it wouldn't be unusual to see the market take a breath here. As we've mentioned, the economy's strong, earnings are very good, but at these valuation levels, you have to step back and really see, what you're buying before you step and commit client capital.
Bill, I want to ask, and/or Russ, this is a little bit of your area also. Is this the computer algorithm programs just buying this
Sure.
stuff at any price without any consideration to price earnings multiple,
Sure.
price to book value, price to cash flow,
Yeah.
how much debt's on the balance sheet.
Yeah, I mean-
They seem to be just indiscriminately,
Yeah.
is it that simple?
Yeah, there's, Joe brings up a great point. These are trade flows migrating very quickly among a small group of names, both up and down. When there's good news, they can't buy it quickly enough, and they buy it at all cost. Conversely, when things are going the other way, it's just sell it all, they don't care what price they get.
Let's talk a little bit about some of the planned IPOs with
Yeah.
Anthropic, with OpenAI, with SpaceX.
Yeah.
They're talking about pricing some of these things at levels that we've never seen in history.
No.
It's gotta be a mistake for anybody to buy that stuff.
Well, the SpaceX IPO, which actually, the roadshow launched today. It will price next week. They're talking about $135 a share. There's no company in the market, even the best ones that we all know, were anywhere close to that. The valuations are,
$135 a share relates
Right.
to $1.6
Trillion
trillion
dollars.
value for the whole company.
Yeah,
It's
it's-
already told you they're gonna lose money for the
Right.
next 10 years.
yeah.
And they got things in the prospectus like, yes, it's all fluffy stuff. This is all
Right.
about having intergalactic peace in the world.
Right.
You know, what about making money? They don't seem to care,
Right.
but the market can't wait to get it.
Yeah.
Plus, what is the matter here? You're conspicuously quiet. Speak up.
No, I think everything you guys are saying is true. You talk about the algorithms, I think, Bill mentioned 20 or 30% moves in a day. We're not talking calendar year returns in stocks, we're talking daily returns. I think the algorithms rotate. Today is the perfect example. Technology's down after the Broadcom earnings, and then the Dow Jones Industrial, and you can actually see it on the TV up here, is up 754 points. So volatility is alive and well. I think we've said that before in our videos. I believe some of the light cycle things, you're talking about SpaceX, OpenAI, Anthropic IPOs, you're getting later in the game. Baseball analogy, you're in the 7th or 8th inning. I think at Terril & Company, we've always been disciplined and value-based, focused on the risk. We continue to do that.
Well, thanks, Russ, and Bill, thank you. So, for our viewers, if anything, we are going to be a better seller of stocks with markets at these prices than we are a buyer. And we certainly think that somewhere, and there are other people yesterday, Ray Dalio was interviewed by Bloomberg, who basically said the same thing. This has got to be a bubble. It makes no sense. We're going to be even more defensive about what we own and not, and be very cautious that we don't get caught up in things that could fall 50% without any question. As a matter of fact, as we said, I see companies fall 30, 40% in one day. Very important that we have real rates of returns for our clients. So unless anybody else wants to throw anything else into the conversation, that's our view on stocks. Thank you to Brian Curtis, as always, for helping us produce the video. Thank
Like
you.
and subscribe.
Yes, like and subscribe.
Like and subscribe.
Happy 4th of July.
Yeah, well, we'll be back probably for the 4th of July with some video updates. But thank you and best to everyone.